everyone. Recently, the Puttucherry government deposited rupees 2 crore into the primary agriculture cooperative credit societies. This is the first installment of a rupees 12 crore loan waiver aimed at supporting small and marginal farmers who have struggled with debt over the years. But what exactly is a farm loan waiver? Simply put, it is when the government or the bank forgives the loans farmers owe, meaning the farmers no longer have to repay the borrowed money to the bank or to the government. Why do farmers need this? Well, there are three basic reasons. Number one, at times natural calamities destroy the crops because of which farmers are not able to produce their harvest. Second, when market price drops, farmers do not get fair prices for their crops. And third, when there are excessive debt burdens. This leads to stress on the farmers. However, this farm loan waivers is a solution for that. Friends, do you know farm loan waivers have a long history in India? The first major one was in the year 1990 under the Agricultural and Rural Debt Relief Program, which waived loans up to 10,000 rupees per farmer, costing the government around 7,800 crores. And it doesn't stop there. Every time elections happen, the state government and the national government frequently announces farm loan waivers because this is a possible way for political parties to get the farmers' votes. So, what are the benefits of these waivers? Let us discuss about this first. First, basic, they act as an emergency aid during natural disasters like droughts, floods, or pest outbreaks. Second, they help farmers who lack crop insurance, offering some relief for their uninsured losses. Third, small and marginal farmers benefit from these loan waivers the most as they often do not have a major financial safety net. Another reason is waivers reduces the farmer's dependency on money lenders who charge high interest. And most importantly, they alleviate financial stress, which prevents farmer suicide, which is one of the major problems India faces today. However, there is the other side of the coin, and this story also has its own negative side as well. So now let me take you through the disadvantages. Also, I will provide you with a solution to the farm loan waivers. So the first disadvantage is that loan waivers cost government a lot of money. This money that the government actually uses in relieving these farm loans can be used in long-term solutions like irrigation systems or new technologies in the farming sectors and in the healthcare system as well. Also, most importantly, it creates a burden on us taxpayers because we citizens are the one who pays taxes, and because of these taxes, farmers are able to benefit themselves. And it is very important to note that farmers do not pay taxes at all. So eventually, all the burden comes to us. Another disadvantage is that they create the fiscal deficit, which can weaken our overall economy. Another disadvantage is that banks face huge losses, thus making them hesitant to give future loans to farmers, and this pushes farmers back to money lenders, and it's ultimately the taxpayers who bear the cost of these waivers. So, I have come up with a few alternatives or a few solutions instead of having these farm loan waivers. The first solution is that farmers can have one common pool or one common bucket in which they can invest a part of their money. So the all farmers in India, we can have a common bank in which they can invest their money. This money can be used during emergency situations. For example, let's say that there was a flood that occurred in West Bengal. Now imagine if we have this common bucket in which farmers invest money, a part of this money can be used to help those farmers in West Bengal who suffered the losses. So at the end, this money is actually used by farmers, it is invested by farmers, and it is regulated by farmers as well. Thus, it does not create any burden on us taxpayers as well as the government. The second solution is that crop insurance should be encouraged. Now, crop insurance is a thing that exists in India, but it is not that widely recognized by us. The government should create awareness about this concept, and we need to bring crop insurance as a separate sector altogether and strengthen it. And this is one of the most important reasons, because apart from only benefiting the farmers, this will also create new jobs for our country. The third solution is that the government must ensure that MSP or minimum support price is guaranteed at fair prices for crops. Now, what is minimum support price? It is the minimum money that the government promises for that specific produce by a farmer, no matter what the market price is. For example, if I am a farmer and I produce 1 quintal of cotton, now the MSP will allow the government to pay me that designated amount of money it had promised me that it will pay if I produce that 1 quintal of cotton. If I am selling it directly to someone and there I am getting a higher rate, I will sell it there. But MSP will allow me to at least get that designated amount the government had assured me it will give if I give the government that specific amount of cotton. At the end, it is always the taxpayers who face the consequences. Imagine if we scrap loan waivers, we'll come up with new solutions. We will not only save money, but also the government will be able to invest that money in real development and to bring in new technologies in the agricultural sector. And we will be able to strengthen this sector. What do you think? Should we continue with these farm loan waivers? Do you have any more new solutions? Do you think it's time for a better approach? Let me know in the comments below. Thank you.